Good morning and welcome to another Daily Market Insights provided to you by Orbex. Today I want to give you my insights on Aussie, as we saw some very large moves to the downside earlier today, despite we had an upbeat employment report, and also give you my preview on dollar yen a few hours ahead of two major reports, durable good orders and also the housing data. Please note, none of this is to be considered as investment advice, and losses can exceed profits. So starting with the Aussie first, we can see that employment change came out at 39.1 compared to 27.8 thousand, much better than expectations. But we saw an initial move supporting the release actually up to the 72 cents. But following that, a few hours later, we see prices moving all the way down to 71 cents psychological barrier, and also at the same time a trend line of the ascending channel that we see prices have been moving in over the past few days. Now there is a reason, of course, for this, and it's because one of the major Australian lender, the Westpac Banking Group, predicted that there might be a interest rate cut in 2019. So of course that caused a little bit of a downside risks to the Aussie dollar, with prices moving all the way to the bottom. Now from here we can have either these, one second, we can have either these turning out to be a false break, okay, where prices are expected to move all the way up to the top of the channel. But of course, first we have to see the 50 Fibonacci retracement breaking, okay, or we can see prices, retesting these supports level, which will be dynamic resistance pretty much, and then move lower. But for the second case, for the second scenario, there isn't much of a sign apart this very big breakout candle on the 1 hour chart. Whereas in the on the upside scenario, there is some sort of indications supporting that bulls may have a better sort of more supportive bias, let's say. And that is because if we check the daily chart, we can see that there is a bullish divergence, and also on the 4 hour chart we have most of the momentum on the MACD indicator being onto the positive, traded on the positive side rather than on the negative. So now moving on to the dollar yen. Dollar yen has also been moving in a upside channel for quite a while now, okay, and reached the 111 psychological level. Now that was mainly probably like the beginning of the week. After reaching that level, we saw a decline in prices, and since then we have been moving in some sort of ranging channel with an upside bias, without prices though being able to reach the 111 again to form a double top, which means that bulls are a little bit weaker. Okay, now from here, and dependent on the data, of course, we could expect prices to indeed go all the way up and reach the 111, or even break further if the data is supportive, or break below this ascending trend line support and move lower towards 110. If again the data are supporting this. Now the first round of data is the core durable goods. The second one is the housing data, I would expect the first release to be a little bit more weaker because traders probably won't want to make any big moves before the second release is out. And after the second release, in case there is some sort of downside or upside momentum, we might see some breakouts outside the range, the tight range, and see some sort of directional bias. Thank you for watching our daily video. Feel free to subscribe to our channel to stay updated about the markets, and also visit our blog where we cover the latest news, publish trading ideas, and provide all the necessary tools to serve you responsibly.